everyone, John Henry here, slingshotfutures.com, and welcome to the daily futures and cryptocurrency market outlook for tomorrow's trading. It's going to be the 12th of the month. Welcome back from the weekend. Hopefully everyone was able to rest up and kind of get ready for today's trading. Not that a ton happened, but we did actually get some pretty good movement, which is, well, certainly better than we can say for, really most of last week at all. So it's kind of nice. It's a good feeling to see the markets moving with some decent fortitude, I think would be the best way to put it. Now, as always, before we jump on in, make sure to swing it over to slingshotfutures.com, scroll down and click on the Join the Daily Outlook newsletter. That's going to let you sign up for sign your email up on our email list, rather, so that you'll be notified every time one of these videos comes out. Along with that, in that newsletter, we talk about all kinds of different stuff, from cryptos to futures, forex, stocks, you name it. It'll show up in there at some point. And we also talk about any different announcements or anything that's going on. So it's a great newsletter to get your hands on so you don't miss anything. If you haven't done so already, make sure to click on the live trade room and subscription and trial info, and that way you can sign up for a 3-day trial with us in the live trade room. You can sit down with us for a few days, see what we're all about, see how we do things every day. You'll be able to see the screens, you'll be able to see what we're doing. It's just a great way to get a feel for how everything works and if it's something that fits what you're looking for. Now, of course, if you do decide to join as a full-time member, you get the live trade room as part of the package. You can also subscribe for a weekly or monthly subscription to the live trade room. And don't forget to check out some of the discounts in the VIP members section, because there are quite a few pretty nice little bonuses there. Now, taking a look at the futures market side of things, we have the euro, which for the most part has a nice bearish trend to the downside. This is something that we're also going to see a lot, is a weekend gap. We have a big weekend gap on a lot of the markets, pretty much all of them. In this case, the euro has a weekend gap to the downside, and that gap is at 1.2395 rather, with some good bearish downside momentum afterward that remains open. As long as those weekend gaps stay open, the market is going to have a hard time getting that continuation to the downside because it hasn't finished its job off yet. Almost always you're going to have a weekend gap filled at some point during that week. Now, it might be on that Monday, it might be Friday, but either way it has a very high probability of filling at some point during the week, and that goes for most of the markets today. Now, aside from that, we are still in a bear trend working our way lower. Nice bear descending wedge. And there's a couple different ways you can draw this up. You can draw it with a slightly tighter wedge, which gives us a little bit of a break at the bottom there and then a failure of continuation. But then also you could draw it a little bit wider. And wider isn't necessarily a bad thing either, because that gives us a little more to work with. We could be looking at this whole thing as a slight overdone, right? An exhaustion on the bottom and a retest of that exhaustion. We do get that a little bit on the kind of shallower one here, but for the most part, I think that they both fit, and you can definitely see that if we draw the wedge across the bottom, going from here to here, going a little bit wider, or right here, we have the support level coming into play. We have a retest at the bottom of the channel here, that held. We have a retest at the bottom of the channel there on the steeper one, and that held as well. So I think to kind of get the best of both worlds, leaving it on the narrower one and then widening it out to something a little bit wider to give us a potentially larger wedge to the downside makes a little more sense. Again, that gives us kind of the best of both worlds. Now, one big thing that stands out here is this major swing low that broke down pretty darn aggressively. They came back and retested it to the tick. They came back again and missed the retest, and now they aggressively pushed lower. The first area that I am very interested to see what they want to do is selling at around 19,740, and just kind of waiting to see if the sellers have what it takes to hold that area, or if that was just kind of a fluke. But that 19,750 to 740 area is a pretty interesting location nonetheless. Then, of course, we do also have the earlier structured location with the swing low being formed, another swing low being formed, swing low. They finally broke down. They tested as resistance. So that 19,970, along with the fact that it's right at 1.2000, is a pretty big level that I want to keep my eyes on as well. So overall, looking on the sell side, but not losing sight of the fact that we have a weekend gap that could suck the market back up as a kind of a magnet to finish the job off. On gold, we have the very same situation where have the weekend gap at 1351 that remains unfilled. We had a big open to start the week off. Big volatility, big candles, and we really didn't break outside of that volatility until earlier this morning at around 8:20, where the market opened up and they finally started trying to break lower. that overall movement, that really doesn't make me believe the downside very well. Why did it take them so long to finally decide to break down? Where did all of that pressure go when we were getting this massive amount of volatility? So even though we are breaking to the downside, I have to think, you know, maybe this is just a fake out. We're coming back into the major area of resistance and support, and that leads us with monthly support as well at 31.9, that big thick green line, and we are right in that area right now. So given the lackluster movement that we've seen from the buyers and the sellers really, and that start of the candle, I'm looking at this thinking, well, I don't mind the sell side, but I want to start loosening that sell side up a little bit if we go a deviation down. Meaning you measure that first kind of extreme volatility and then dropping that measurement to the downside, and that leaves us with an area of interest at 30.1, and that's really the area that I'm looking to potentially buy into, with the assumption that this breakdown is just a trap. I don't believe it. If they were actually there to stay, why did it take them, you know, 10 plus hours to actually get the breakdown? So they're not really proving a whole lot to me. Aside from that, though, if you are looking to get a slightly better price, we do have potential areas of interest at around 37.3, and then, of course, fading the highs at 44.6, and again, not losing sight of the fact that we have the weekend gap at 51, which could draw the market back up. In the short term, I'm looking to either sell the highs if they do give us a retracement, or buy the lows, looking for a longer-term hold, potentially for the rest of the week. On crude oil, we have a little bit of a V-bottom. This isn't something that we get very often, but for the most part, the market really didn't do a whole lot in the morning session until we hit just after the open for crude oil at 9 o'clock. Got a monster rocket down and just push. Then all of a sudden, out of nowhere, they fail the sell side and completely reverse the other direction and go back through a new high. So now, basically, the cycle began with a new high, into a new low, and now into a new high. The anticipation is that we're in a little bit of a range, and at the very least, the sellers are likely going to try to get back into that earlier area of value between 85 and 63, where most of the trading took place today. That little breakdown and break up move, that does appear to be a little bit more of a V-bottom, and that leaves open objectives to the upside at 48.41, and the big one at 48.52. So the upside is definitely still the direction that I'm looking for, but with the understanding that we could get a little bit of a deeper pullback, knowing that we are in a little bit of a range sentiment. We have a V bottom. Those almost always come with at least a, you know, 25 to 50% pullback, and that's really what I would like to see. 47.85 is the first area of support. 47.63 is a lower edge, and both of those are potential long opportunities to push the market back up. No weekend gap that we have to worry about on crude oil. That has been filled already, so that is out of the way, which is kind of nice. Now we can just look for continuation to finish off the objectives. And then finally on the S&P leaving a wide open weekend gap down here at 62.5. So we'll make sure that we mark that up and not forget about that, because again, at some point this week that will likely fill. We are pushing aggressively higher though. Very bullish day today on the S&P and across the indexes really. NASDAQ being a little bit lackluster, the Dow being a little bit lackluster, but for the most part, really good bullish momentum to the upside, good breakaway moves, and we are running directly into the major objective from the first initial burst higher, and that's at 87 3/4. That is finding a lot of resistance. We got a brick wall right here of sellers, or well, actually buyers exiting as sellers more likely than not, taking their profit targets off near the top. That said, we do have one more objective to the upside at 89.75 to 80 to really 90. This whole kind of zone up here is the big area of interest next, after if they can break through 87 3/4. What I'm looking for is, given the fact that we are running into this brick wall of resistance, mostly just buyers exiting with profit targets, I have to be a little bit cautious in buying too high. There is a very good chance that you end up buying up here, maybe it pokes its head through a new high, just taps an area of resistance and falls back down. It doesn't give you a whole lot of wiggle room to play around with anything. So instead, I'm looking for a little bit of a dip lower in the overnight session, 83.5, 80.5, or if they really want to be nice, down to 76 3/4. Probably not going to get that one. Probably not even going to get 80.5. Really, the big one that I'm looking for is 83.5 to buy into for that follow-through bounce to finish the job off at 90. So that's going to do it for the futures market outlook. Now, looking at the news for tomorrow, there isn't really anything. Now, that said, today didn't have anything, so I guess something is better than nothing. Tomorrow in the kind of mid-morning session at 10 o'clock, we have the JOLTS job openings for July, forecasted at 5.96 million, previous to 6.163 million, and that comes out at 10 o'clock. And that is the only big news that we have for tomorrow, so there's not really a whole lot to work with in terms of news. That said, though, that may kind of be a good thing. We are coming off the backs of a really sloppy kind of week last week, and so far we're seeing some pretty good movement. Fingers crossed that continues, and that lack of, huge news announcement one after another like we saw a couple weeks ago, well, maybe that will maybe that's a blessing in disguise. We'll have to wait and see. But overall, that's going to do it for the outlook. Now, taking a look at the cryptocurrencies, we've got plenty of stuff going on for the cryptos. Bitcoin, for the most part, is still on sale as far as I'm concerned. Sitting around the 4,000 to 4,100 mark, we have the market still consolidating here. And usually when the market consolidates, typically what you see is that it breaks out over the weekend. That didn't happen. Right? It tried to. It had a good rally in the weekend session, but for the most part, didn't really get a whole lot done before it went back into range bound. And a lot of times when you get that range going into and coming out of the weekend where normally it would break out, you tend to start thinking that, well, this may be a range for the rest of the week. They don't really have a whole lot to work with in terms of, big news announcements or anything like that. And for the most part, well, we're just kind of stuck, right? So the way that I'm looking at it is we are still on sale, and I'm just waiting for the market to bounce back up. What I would really like to see is buying pressure off of the lows. I'm not interested in buying where we are right now. There's already been plenty of opportunity to buy where we are right now, so a lot of people are probably already built in pretty well. What I'm looking for more is potential wedge lows, potential wedge high breakouts, something along those lines. So I want to buy below the wedge. I want to buy it if we get a breakout and a pullback. Right? I want to pull back to the wedge, buy that pullback, and then find continuation. So right now, Bitcoin's just kind of hovering around in the middle. Not much that we can really do here, so we're in a holding pattern until we get one of those scenarios, a break below the wedge or a break above it and a pullback. Either way, though, we're just kind of sitting on hands for Bitcoin right now while it's on sale. Bitcoin Cash, we had a big wick drop in the weekend session, all the way back down to almost a trap swing low. They almost trapped that swing low, but they didn't quite hit it. I'm still, in the long run, looking for 0.1 as my big area of interest. 0.11, 0.1, somewhere down there. We still haven't gotten it. But for the most part, where we are right now, we're just smack in the middle of a whole lot of nothing. I would much rather wait for another retest of the channel lows or anywhere underneath there for buying pressure, because right now, this high looks a little bit exhausted and they couldn't follow it through, right? They had that big breakthrough, the secondary leg that we called out nicely. They pulled back, had a lower high, right? They failed, and now we're starting to see that continuation of failure, including all of that wick down there. Makes me a little bit nervous of buying too aggressively, so I would rather buy when it's cheap, at least down to probably 12, but I would still love to get that 10 area. I've been drooling over that for the past month, and it just hasn't gotten down there. So anywhere from 12 or lower, I think, is fair game for potential positions to the upside. On Ethereum, we're still grinding around. Again, if you zoom really far out, we can see that this is on sale as long as it's at around 65 or lower. Right now, we're a little above that sale price at 70s, so if we can get a little bit of a dip lower, once again below 65, I will be a happy camper for longer-term position type trading with buying into a bigger move. We have a nice wedge forming. Everything is looking pretty good. I want to snap below that area, a strong bear close that you can buy into, assuming that it's nothing more than a trap, and then drive the market right back up again. So Ethereum, again, just like most of the markets, we are still on a holding pattern, but again, that fake break of the lows, wedge bottom, when it's on sale at around 65 or lower, it could be a very nice area of interest. And then we've got Litecoin. Litecoin is just kind of hovering around the same zone that it has been as well. Not really a whole lot of movement. We have the previous swing highs and the previous swing lows kind of coming into play. And that puts us at the same area now at around 15. We've been talking about that 15 area for quite a while. That does also appear to be about a 50% pullback. So there are a lot of things stacking up at around that 15. We have a wedge forming, and the market really hasn't given that wedge up. But if they are able to at least break that wedge a little bit, I would like to see, again, another snap lower into interest areas of 15 or below for buying pressure before we push the market back up towards the highs. So unfortunately, Litecoin is also in a holding pattern. Zcash showing some pretty good downward momentum here, and very similar to Ethereum, we seem to be finding a little bit of a bottom. Now the bottom on Zcash is being put in at around 45 or so, and since that 45 test, we're just hovering around a potential wedge low, not to mention the wedge high coming across here. So a lot of wedges on the cryptocurrencies, and I think Zcash really is just begging for a quick snap lower down to that 45 again. Find a double bottom or maybe just a slightly offset double bottom, and then continuation back to the upside. And then finally, Burstcoin. Burstcoin did rally out of the area we were talking about quite a while ago, back in early September, right around here, and they did finally get that rally to the upside, so beautiful continuation there. Now we're looking forward again, another beautiful breakout to the upside. The one thing that has me concerned, just like before, they've aggressively blown through the highs, and they gave it all back pretty aggressively as well. So I'm looking for a deeper pullback to at least earlier areas of interest, and that means around 287 down to 280 are the big areas of interest. And of course, if they can go all the way down to the range lows, it would be even happier at around 240. But for the most part, looking to buy this pullback, preferably a deep pullback, and then looking for another push in towards the highs. So that's going to do it for the outlook and everything going on for the markets tomorrow. Overall, like we always say, you got to make a plan, trade the plan, follow the rules, and you'll be all right. There's a lot of it almost feels like the market is in sort of a weird transitional state of, oh, we're going to go breaking out really aggressively today, and then the next day we don't really go anywhere, and then the next day after that it's all hands on deck again. We got to play it really safe while these markets are still kind of fluctuating around like that, and that's why we make those plans in the first place. So that's going to do it for this one. Hopefully you learned something, hopefully found it enjoyable, and have a little bit of a game plan for tomorrow at the very least. As always, if you have any questions, you can send it to me in an email, jbrink@slingshotfutures.com. And like we always say, and we'll repeat it again because it is very important, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.